Hello, hello, everybody. Welcome to another edition of This Week in Crypto here on May 21st, 2021. Boy, oh boy, has it been a crazy, crazy week for the crypto markets and the crypto community. We had quite a fall, obviously. We'll jump into some of the numbers and go into the specifics of just how big this fall was. Obviously, we have been touting that the markets have been inflated for quite a while based on our metrics, and I'll segue into my weekly mention here that what we do on this channel is always based on data-backed evidence and historical patterns that we've seen. It's never intended to be investment advice. That being said, if you've been tuning in for any of our calls here over the last month, you have likely seen that we've been showing a lot of danger zone types of metrics when we were up, above 4,000 for Ethereum and, above 55,000 or so for Bitcoin for a while there. And coming back down to earth was only a matter of time, really, in our opinions. There's always a certain amount of risk in taking profit. And whether you did or not, hopefully you were prepared for this type of dip, and you're acting accordingly now. And a lot of what we'll be going into today is, whether it's time to buy that dip based on what our metrics are showing, or whether we might be in for a little more pain. Obviously, there are lots and lots of social trends showing up right now, indicating what the crowd thinks, and we'll jump into that in just a moment. For starters, though, as I always do, I'm just going to give a quick recap on what the percent changes look like for the top 100 or so assets here. And we can clearly see Bitcoin had quite the drop of negative 19% over the last week, negative 33% for Ethereum, which was quite a drop. Being as crazy of an ascension that it was for Ethereum over the last month, it made sense that when a dip did happen for Bitcoin, Ethereum would really get hit hard, but it doesn't mean that it's on that continued trajectory. We can see plenty of altcoins here, if not the majority, that actually got hit worse than Ethereum. And we're in for an interesting ride here, and part of figuring out what to invest in isn't just whether it's Bitcoin or to be in fiat, but whether it might be an opportune time for altcoin season based on these very, very red numbers. So we'll talk about that a little bit too. And I want to make sure you guys are aware that you can ask questions about specific assets, and we'll hit on at least 2 or 3 of them toward the end of this call here and show some substantial metrics regarding them in terms of what they're showing right now. So
for people that missed last week's stream, just casual reminder to check it out. We started this stream with Maxim, our Santiment founder, talking about the market in general and Bitcoin in particular, and where he thinks the market is headed based on technical structures and general state of the market and our metrics. And he basically said that sure, in the short term, maybe 1 or 2 to 3 days, there might be a slight uptick, which I think there was. Bitcoin, when we were recording, Bitcoin was below 50, I think around 49, and then it bounced back slightly to like 51K, and since then it's just been low. Yeah. So obviously Elon and China have helped Max with his prediction push it up a little bit sooner than maybe he even intended to. But yeah, seems like he was on point so far.
Yeah, perhaps Elon was listening to Maxim's prediction and said, you know what, I agree with him.
Could be.
And then, joking, of course, guys. But yeah, that was quite a call by Maxim, and our metrics backed it up, and our staff look at these metrics just like all of you. And we were seeing lots of danger zones and red and yellow flags all over the place. So again, hopefully you were able to react to it a little bit. And now it's all about figuring out what comes next, because crypto markets move fast, and there's always a future fluctuation that we can prepare for here. So
yeah. And today just has, sorry, Brian, today just has, you're in for a ride. If you thought last week's metrics were crazy, today's metrics, or basically the indicators for Bitcoin and Ethereum over the last 48 hours have just been sky high or sky low, depending on the type of metric. But we're going to go over a lot of data today. And I mean, there are some hopeful signs. Just let's get it out there. But on the other hand, there are a few that still concern us. But either way, major volatility in terms of on-chain and social data. And strap in for a ride here.
Oh yeah. So what I'm showing right now is our buy or buying or bought comparison to sell or selling or sold in terms of the total mentions that are being made on public platforms that we track that are crypto related, be it Twitter, Reddit, Telegram, Discord, or pro traders chats that we have access to. The blue lines here are the buy calls. The red lines are the sell calls. Keep in mind that this is on individual axes. So there's about half the amount of sell mentions that there are buys over the last 3 months. So in terms of real numbers, these red numbers are about half of their actual values here on the graph if we were to use a shared axis. Either way, what we can do here is look at how the mentions have compared to each other over time based on their individual numbers. And we can clearly see that the big buy call and sell call spike was kind of right around the top, but there were a lot more buy calls overall, adjusted for axes once again, compared to sell calls, right when we were at around that local top here on May 8th, sitting at about 58K. The true all-time high, of course, was back here on April 14th, and we had a lot of buy calls after there was just a very mild dip and people thought it was just a blip on the radar, and then we would go straight to 70. That, of course, didn't happen. Arguably because of the fact that people were having so much FOMO right around here. And then, we kind of eventually, after this local top a couple weeks ago, we had the massive drop. We had, it's a little hard to see here, but another mildly large buy call, as people said it's time to buy the dip. And that did not happen. Anyone who thought that this was the dip to buy got faked out, and they experienced further pain. We got all the way to roughly, depending on the exchange you were looking at, the 37 to 38K range for Bitcoin before bouncing to where we are now in the 41K range. I'll get to Ethereum in a second, but they dropped, at least on the main exchanges that I look at, around the 2100 range before coming back up to the 2800 range. So this was the big dip here. We can see here, the big story on this chart is the massive spike in sell calls. And this is what you want to see, actually, in terms of an indication that the price will bounce. You want to see this as an indicator of maximal pain occurring and lots of people, liquidating their longs in its entirety because they think that Bitcoin is going to drop back down to 20K or below. This is basically the crowd recognizing that there was a massive dip that has changed their perspective of Bitcoin being a solid asset to invest in. And that's basically the FUD, fear, uncertainty, doubt, that we want to look for as traders who are constantly trying to find edges and ways to trade against the crowd perception of where we're going. And sure enough, when this red spike hit, this coincided with the bottom. There was one double bounce, and then we began to rise. Doesn't mean we're going to continue to rise. If we start seeing lots and lots of sell calls again, somewhere like this, or even just anything that shows that the red line here is dominating over the blue line, that would be an indication that there's still a lot of FUD despite this mild bounce that we're seeing right now. And that would likely indicate that the price is probable to continue rising. Of course, there are going to be a ton of other metrics that we look at here today that kind of act as a complement to this metric. So don't think that this is the end all be all, but it's a good thing to start off the show with today because of the fact that there was such a prominent sort of agreement that there was that it was time to sell all your bags and get out right when the bottom occurred.
If you actually, Brian, since we're already on Santrends, I mentioned it to you before the call.
Yep,
I
I
was
got it right
looking
here.
at dimensions. Great. Yeah, I was looking at dimensions of bear market. So basically, the way that you search for mentions of two or more words is you add and between those words. So you can see here, Brian added bear and market. So what that does is it searches for all of the mentions of those two words together in a single message or a single comment. So Brian, actually, if you can zoom out a bit, this is the last 3 months. Let's zoom out to the last year just to see how high these mentions are. And boy, are they high. The crowd, or in general, the crypto mainstream community is very much on board with the fact that this is the beginning of the bear market. So you can see that the last time or the last few times that we have had these types of spikes in bear market mentions, they did sort of coincide with the local bottoms for Bitcoin. So both in April and then February, March as well. So all of these dips have sort of prompted a sort of increase in the amount of bear market mentions. This is by far the strongest response that we've seen from the community as far as where they think the market is going to be headed next. And you can kind of see the same thing if you look at the social sentiment for Bitcoin. It has dipped once again, sort of slowly into a negative territory. So overall, I think most of our metrics, social metrics, are pointing to a growing a bearish outlook by the mainstream crypto community. And obviously, they're not the only ones. If we already want to move in, because it's already been sort of 10 minutes, we can move into the derivatives part of Bitcoin's data. I use this as a thumbnail for this video. The funding grade for Bitcoin has finally started to go into a vastly negative territory on some exchanges. So on BitMEX, I think that's slightly an outlier compared to other like high volume exchanges, but it's still worth mentioning that the average funding rate, or the general funding rate for Bitcoin, what was it at its lowest, Brian? There?
It got to negative 0.25%
Yeah.
for an
So
8-hour window.
I mean, quite low in general for people that are unfamiliar with what this means. The funding rate is a fee that is paid by one side of the perpetual contract to the other. So it essentially means that when the funding rate is high, it implies a bullish bias by derivatives traders. It means that Bitcoin longs are paying Bitcoin shorts in the market, or the derivatives market and traders are on average quite bullish towards the coin. And then vice versa, when we see these dips, it means that Bitcoin shorts are paying Bitcoin longs, and therefore the market has a predominantly bearish bias. So I was looking at funding rates on other exchanges as well. It's currently at around minus 0.02% on Huobi. I think Binance was minus 0.01, and OKX also had a dip in the past 24 hours as well. So this is sort of the first time that we're really seeing a major decline in the funding rate for Bitcoin across high volume exchanges. This is the lowest point on BitMEX in particular that we've seen its funding rate go since the beginning of the rally. So very similar to what our social data is saying or showing at the moment. The general sort of vibe of the derivatives market is pretty much along the same lines, which is get the heck out of Dodge and short Bitcoin for the time being. Now, it is worthwhile mentioning that previous sort of dips in the BitMEX funding rate in particular, although they sort of pale in comparison now, they have sort of coincided with the local corrections for BTC. For local bottoms for BTC. Both of those dips that Brian is now highlighting on the chart in January have kind of indicated that we are finally moving into a bearish bias, that the market is no longer overvalued and might actually be oversold, and therefore there was a potential for short-term recovery. Obviously, we have already bounced back to above 40K once again, but it's worthwhile noting that both the crypto mainstream as well as the derivatives market are sort of on the same page as far as feeling like this might not be the end of woes for BTC. There's a lot of on-chain metrics pointing to the same thing, but as far as the funding rate and social data is concerned, I think, Brian, they're pretty much in consensus at the moment.
Yeah, and everything Dino said pretty much covered what I was going to say. I just wanted to briefly mention how interesting it was that Ethereum went the exact opposite direction. when this dip happened. Obviously, Bitcoin hit negative 0.25%, which was, I think, the record ever since Black Thursday happened. And the day after, it got right around this low as well. But Ethereum, on the other hand, jumped up to 0.38%, which was its highest since euphoria kicked in back in April 10th, around 6 weeks ago. So a lot of people on this rally decided it was time to jump in heavy on the Ethereum side and jump very out of Bitcoin at the same time. And this doesn't just mean that they're betting for Ethereum and trading out of Bitcoin and into Ethereum. It means with this kind of short, they're thinking Bitcoin's price will go down, not that it'll hover and Ethereum is going to go up. So a lot of people here were betting just for Bitcoin to go down to like sub 30K and things like that. So they so far have not been very successful, whereas the Ethereum longs have actually been quite rewarded for buying this dip. And I find it really fascinating. So right now, the dominant perspective, at least from just these two coins, shows that altcoins were kind of being favored, probably because of the fact that they dipped far greater percentages than Bitcoin did.
Yeah, I mean, I think it's a good time to move into on-chain data because there's a bunch of stuff that we want to cover. So yeah, if you, Brian, if you want to start with mean dollar invested age, I'm fine.
Yeah.
Sure. Okay, let's start with that.
Sure. So mean dollar invested age, for those who don't know, essentially measures the average age in which the dollars invested in an asset are sitting at any given time. Generally speaking, as a rule of thumb, when the mean dollar invested age is going down, it's a good indication from a macro sense that Bitcoin or any other asset can grow, because younger investments on average mean that there is dormant investments being moved around, as well as many new investments coming into the space. And it kind of lends to a metric like network growth, where new addresses are propelling a potential rise because of the overall increase implied from token circulation, address activity being able to rise, things like that. So up basically almost I'll go to the last year here
I
to
mean, we can
illustrate
actually
it.
look into the last 5 years for Bitcoin because the trend
Sure.
is, yeah, the trend is quite clear. So like Brian says, the mean dollar invested age, like in a nutshell, these declines in mean dollar invested age point to periods of redistribution from one sort of entity or a group of stakeholders to another. And these declines, maybe Brian, good to filter out the Ethereum for now, just so people can see Bitcoin alone. There we go. Previously, declines in mean dollar invested age have kind of coincided with the bull runs for BTC, both in 2017, 2019, even 2015, which we're not seeing on this chart. There has been pretty much the same sort of pattern. And then so far, over the past couple of bull cycles for Bitcoin, we have seen the mean dollar invested age bottom, or the bottom of this valley, coincide with the top for BTC in the period of long-term actually correction for BTC. So it's slightly concerning. The reason why that is because it sort of suggests that redistribution is over, and in a way that the bull market is sort of slowing down and coming to a close, where most people that have sort of accumulated BTC are the circulation of BTC is no longer active, and has most investors have kind of went back into dormancy. So for the first time in quite a while, we are seeing the mean dollar invested age chart move slightly into the positive, Brian. Kind of concerning signal. Obviously, it's just started, but it's not ideal. It's not necessarily what you want to see. I don't think this is the end all be all. I mean, we have seen sort of slight upticks in mean dollar invested age previously, like in the beginning of April as well. And then, it continued to drop. But it does point to the fact that this period of redistribution on a large scale network-wide redistribution of Bitcoin, similar to what we've seen in 2017, similar to what we've seen in 2019 and 2015, might be coming to an end. If it does, it is probably going to be quite difficult for Bitcoin to recover to 50 and 60K, in my opinion, at least.
Yeah, to an extent, I think there's a little bit of like a self-fulfilling prophecy when it comes to this metric, where
Mm-hmm.
people see a top like this back in December 2017 and they say, I don't want to move around my tokens anymore because I have no idea whether we're going to recover. So then they kind of have that investor paralysis where they neither want to buy or sell. And that's one of the things that can actually make a price go down is people just locking up and basically saying, I'm going to do nothing, which thusly makes it so circulation is no longer occurring. That's kind of what happened in December 2017 when we got up to that 19.8K top that was documented very heavily at the time, and then we had that big dip, and the mean dollar invested age began to just slowly age because of the fact that everyone was becoming dormant with their investments. And like Dino said, we didn't see anything like that until really October of this year, when we had a very similarly steep drop that went all the way until pretty much early May, and this drop off is, I think, what is causing the same sort of pattern to occur. People don't want to circulate their tokens or their investments as much because they have no idea where to go, and there's a lot of polarization at these levels, and that's why you're seeing probably the biggest rise we've seen since the start.
It's not great, not great. Maybe let's also show a few additional sort of pain markers. Like the title of the video is Bitcoin close to maximum pain? I actually wrote an article a few days ago about Ethereum and being possibly close to maximum pain. And there's quite a bit of an update to that article. We saw the beginning of some pain markers in Ethereum, like the amount of liquidations for wrapped ETH on MakerDAO CDPs, spikes in exchange inflow, dips in network profit loss. And then 2 days later, we are seeing them at a much more impressive scale, so to speak. So let's start with Bitcoin. And maybe, Brian, we can look at exchange inflow for Bitcoin, just sure. As an idea to start with. How are Bitcoin holders reacting to this dip? Are they holding? Are they, diamond handing or whatever? Or are we seeing a sort of massive capitulation? So we are here seeing, maybe take a lower interval, Brian, for exchange inflow. Maybe, I don't know, you probably have it on a daily.
Yeah, I have it on daily. I'll just have inflow by itself and
sure.
we'll put it at 3 hours like we discussed before the call.
Yeah, and then zoom out to since the start of the rally, just so we can see. Big spike. Big spike equal a lot of Bitcoin seems to be moving to known exchange wallets, at least the ones that we have labeled as exchange wallets. Now, what that means in general is that a lot of people, a lot of Bitcoin holders seem to be quite concerned about further corrections and further price downtrends. This is something that every now and again does seem to coincide with local bottoms, and I have talked about this last stream. I think I used IFI as an example where we have seen similar sort of spikes in exchange inflow around local bottoms, suggesting basically holder capitulation, network-wide panic sell-offs, and then if there is enough sort of demand on the other side of the aisle, if there's enough interest in buying the dip, it can sort of earmark a period of short-term price recovery. So for Bitcoin, we are seeing massive capitulation. And I've seen, I think, Novogratz or somebody was also saying that this looks like capitulation, and on-chain data does seem to suggest that as well. And then, Brian, if you look at Ethereum, it's even more stark. I believe it is the biggest spike in exchange inflow for Ethereum in a while. Yeah, since, well, basically since the previous bottom, I believe.
January,
so very big spike, suggesting that not just Bitcoin, but Ethereum holders are also coming out in droves, seemingly giving up on holding the top and second largest asset for the time being. So overall, I think we are seeing sort of a period of I'm not sure if maximum, but definitely a lot of pain. And then probably the second best indicator, in my opinion, as far as figuring out where we are in terms of pain scale, is by looking at network realized profit or loss. And Brian, maybe you can show it for both Bitcoin and Ethereum, because they are so low now that I'm not even sure, like, are we seeing some errors in our data? I don't think we are. I checked with our devs, but they are so low, suggesting, okay, first of all, let's explain what network realized profit loss is. It's a metric that tries to calculate the overall ROI, or return on investment, across all daily transactions. So what we do is we take the price of each unit of Bitcoin last time it moved, and we assume that that is the buy price of that unit of Bitcoin. And then the next time that it moves, which would be today, let's say, we take the price at which it moved, and we assume that that was its sell price. And then the difference between those two prices across all daily transactions becomes this metric. So when you see spikes in network profit loss, it means that at that day, on average, all of the coins that are moving on the blockchain are moving at significant profit relative to the last time they moved. And then when you see big drop-offs in network profit loss, it suggests that at this day, like today and yesterday, all coins that are moving on the blockchain on average are doing so at a significant loss compared to where they were last moved, assuming that's where they were last acquired. Obviously, this is an assumption based on on-chain data, so it's not going to be perfectly sort of aligned with actual buys and sells, but I think it's a generally very sort of interesting metric to gauge the overall sentiment of the holders of a particular coin. So both Bitcoin and Ethereum are now showing the biggest, by far, dip in network profit loss since the start of the rally. I think for Bitcoin, it might have been the biggest since even 2017. It kind of is difficult to figure out exactly how low it is because data gets aggregated when you look at a larger time frame, but it's massive. Either way, it's massive. What that means is that on average, all Bitcoin that are moving at in the past 24 hours are moving at significant loss. And the same thing is what we're seeing with Ethereum. And pair that with these massive spikes in exchange inflow, and it seems like many people are giving up on the market. We are seeing a lot of pain, a lot of blood in the streets on on-chain data for both Bitcoin and Ethereum, Brian.
Big time. Yeah, it's pretty shocking, especially looking at this 5-year perspective and seeing just how low this realized profit loss is, and whether it's whether this was a bit of an outlier in the data or not, we're not sure. But I fathom that it's correct. I really think that because of the amount of new entries that came into the space, especially in the last 6 months or so, and even things that weren't related to Bitcoin, the DeFi craze, and all sorts of things that just caused this mass hysteria. Dogecoin, Bitcoin's going to be impacted by this, like frankly, just because of the fact that that every coin has Bitcoin pairs. So people who were in Dogecoin, many of them were saying, "I'm going to get into Bitcoin now." So we have new entries coming from another altcoin that they get all this hype about, and they go into Bitcoin, and then they still end up getting completely wrecked, as they say, and that leads to a massive all-time low spike like this. And we look based on history that these really, really low spikes almost always lead to at least somewhat of a bounce. It doesn't mean that it's going to be, this kind of bottom is going to lead to a new bull run or anything, but at least temporarily, based on history, we can see that prices tend to rise or at least not go further down once you see this type of stamp here in the charts.
I mean, a good way. Okay, so this is, in my opinion, one way that I try to use this metric. Like I said, so what this metric indicates is that a lot of people are flooding out of the market. So they're panic selling, they're selling at a loss. Probably a lot of people that bought in the 40 to 60K range are now heading out of the market. So in my view, especially when I see this type of dip combined with the spike in exchange inflow, I try to look for clues about what's happening on the other side. So basically, are there a lot of people looking to buy the dip? Is there a lot of buy the dip pressure? And one way that I try to visualize this sort of potential to buy the dip as far as on-chain data is concerned is I look at the exchange inflow of stablecoins. And Brian, maybe you want to take us through the exchange inflow of Tether, ERC20 Tether, and USDC, and plot that over the price of Bitcoin. I mean, it's quite striking what we are seeing in the last 24 hours. Like I said, this is all of the metrics have just gone haywire, not just for Bitcoin, not just for Ethereum. Pretty much all of the coins have these massive outliers. Just take any coin on our database and type in a few metrics, and you're going to see huge spikes. Pretty much the highest since the start of the rally. So what Brian is showing here is the amount of USDT and USDC moving to exchanges. And this is, I think, 5 years, Brian. We can take last
yeah, I'll
6
go to
months
3
or
months.
something.
Yeah,
maybe since the start of the rally. So let's say last year or last 6 months, whatever is good. It's very high. So this is obviously not an end-all be-all signal. There are several reasons why stablecoins could be moving to exchanges outside of simply people looking to exchange their stablecoins for more volatile cryptocurrencies. However, a move is a move. And what we're seeing in the last 24 hours is two of the biggest stablecoins in terms of ERC20 Tether and USDC are recording massive spikes in the amount of those coins moving to exchanges. Presumption by some people in the market, by some on-chain analysts, is that this can indicate a propensity to buy the dip. And it has in the past sometimes coincided with periods of short-term correction. So Brian, if you zoom into I think that's like April 23rd or whatever, the last time we had a big dip in Bitcoin's price. Yeah, so that one, I mean, you can even, sorry, you can zoom out. I just meant to hover over it, so we can, yeah, sorry. Yeah, so here we had a big spike in the amount of Tether in particular moving to exchanges before we started to recover in the, that's like late February, probably February 19th or 20th, we had a similar spike. There we go. Right around the correction for Bitcoin. So the fact that we are seeing this massive spike in the amount of Tether and USDC moving to exchanges, and by the way, we're only looking at the amount of Tether and USDC moving to exchanges. We have also checked out before the stream the balance between Tether and USDC moving in and Tether and USDC moving out of exchanges, and the exchange flow balance is also on the side of positive. So it basically suggests that more stable coins are moving into exchanges than out in the last 24 hours, especially when you look at USDT. It's just very high. So it's not a perfect measure by any stretch of the imagination. Yeah, you can see that spike in exchange inflow there. Exchange flow balance, sorry. It's not a perfect measure, but to me, it does suggest that at least there is a sort of a segment of the market that is looking to buy the dip while there's blood on the streets. So obviously, no financial advice whatsoever. Just based on historical trends, sometimes in the past, this has happened around local bottoms for BTC, especially when you look at its correlation with the Tether's exchange inflow in particular. Take that for what you like, but it's certainly, at least from my point of view, what I'm seeing on these charts is a lot of people being in massive pain, suffering, probably selling at a loss, and then some like segregated, maybe even a minority of people, but wealthy people may be looking to buy into the market once again right now. So yeah, quite an interesting 24 to 48 hours, Brian.
Pretty fascinating for sure, yeah. For the sake of time, we'll move on so we can get into what whales are doing. It's obviously an incredibly important topic right now. In terms of what the top stakeholders, the people with the most on the line in terms of how much real dollar value they're gaining or losing based on the price movements right now. I'm going to unmerge everything except for the 1,000 and above category here. And what this is displaying is the amount of addresses that actually hold 1,000 or more Bitcoin at any given time. I'm going to zoom out to the last year here, give a little more context, make it full screen, and we can clearly see a bit of a story here. Uh, in terms of last year, when we were just a couple of months removed from Black Thursday, we had about 2,100, 2,130 addresses of this category with 1,000 or more. We immediately began to rise up, had a little bit of a flat line here, but eventually the amount of these addresses were able to push up the price. We got up to, a big peak here of 2307 in December before a big drop off. It seemed to bottom out around the holidays. So there might have been some sort of holiday profit take of some type from these whales, but it didn't really slow down the price at all. But after Christmas, we exploded all the way up to 2489 of these addresses. That was an all-time high. And eventually we just went right back down to 2148, right about where we started last year. And we're staying in that area right now. So it doesn't appear as though new whale addresses are being made, which shows a lack of confidence from the top stakeholders right now. And I'll also show an alternate perspective. Let me just load up our Bitcoin millionaires template. And it's showing kind of the same story. This in particular is showing any Bitcoin, or I should say the total amount of Bitcoin held for addresses between 100 and 10,000 in terms of the Bitcoin they hold. So similar story, we look back to November. I'll go last year just so we have the same time frame as the one I just showed. All the way back to May, we had 8.5 million held by these addresses 1 year ago. It shot all the way up to, it looks like a high of about 9.2 million. That's a lot more Bitcoin when you're talking about the value of Bitcoin over time in terms of fiat. And that's about where it topped. It was right about a week before the all-time high is when you started to see a little bit of a flat line there, followed by a very, very sizable drop over the last 6 weeks or so. We bottomed out here on May 16th, where they went all the way from 9.17 million to 9.03 million. So that drop in 160,000 Bitcoin, I won't do the math right now, but that would be in the billions of dollars, if I'm not mistaken.
2.8, I think, maybe even 3 point something billion. Yeah.
Yeah. So
by the way, while we were talking, we had another market-wide dump. China's Vice Premier Liu says to crack down on Bitcoin mining and trading activities, to crack down illegal securities activities, and severely punish financial illegal activities, according to Reuters. And immediately we have another drop of Bitcoin below 40K, as well as Ethereum dumping to, I believe, 2.5K at the moment. So yeah, I mean, we continue to get bearish news on the market, and as long as we do, we're probably going to be experiencing these types of corrections. But I agree with you, Brian. In general, this is one of the charts that I look at quite often, and both in terms of the number of large addresses and in terms of the holdings of large Bitcoin addresses, they have not recovered yet since the start of the rally. I find that quite a concerning signal. There has been a very slight uptick in their collective holdings, I believe, like at the beginning of the week. So I thought, okay, now we might be finally moving back into buy the dip territory, but no dice so far, no dice. So I wrote about it in the last week's report, is that if the Bitcoin holders, large Bitcoin holders in particular, continue to show lack of confidence and sort of inertia in the market, it's going to be extremely difficult, I believe, for BTC to sustainably rebound. So, bearish news or bullish news aside, the on-chain data does seem to suggest that for the time being, Bitcoin whales and large addresses are not really that interested in accumulating at the moment.
Yeah. Well, you mentioned the China news. Do we want to talk a little bit about the 4chan Socrates that we saw?
Right. Okay. We can. I mean, it's one of the biggest topics in our social trends at the moment today. So I don't know, Brian. I shared the link with you if you want to open it.
Yeah,
Just
there's one like semi-graphic picture on it. I don't know if we
yeah,
should
yeah.
show it.
We probably
So
shouldn't then. Anyway, there's a guy on 4chan. He wrote about a potential drop in Bitcoin's price because of China on Tuesday. So he said, I mean, for those interested, I guess, Max, you can share the link in chat for people that want to know. Just be careful. There's a not safe for work picture somewhere in the middle of that post. He said, "Hey guys, insider here is the way that he announced himself. He said, blah blah blah. There will be another announcement from China soon. This is on Tuesday, by the way. He says, can't tell you guys what firm I work for, but it's massive and it's working with the PRC, People's Republic of China. The purpose of today's press release, alongside all the FUD, is to get BTC as low as it can before 7 a.m. First, there will be a coordinated sell-off to drop the prices below a certain threshold and liquidate one certain stakeholder. Can't outright say who he is, but he bought a lot of the dip that he was partly responsible for. So in the comments, a lot of people were obviously speculating that he meant Elon. Once liquidated, the plan is then to buy up all the reserves and essentially leave him bankrupted. If you guys want to get rich, grab some coffee and watch for the big dip. Once it happens, things are going to get green really fast. We project 70K. That is all. So, I mean, you get these Nostradamuses like twice a month. Um, I'm not even sure exactly when this was posted, correlated, like related to market action, and I'm also not sure what 4chan's policies are as far as editing comments afterwards. But there has been quite a bit of talk today about this anonymous user that has seemingly predicted that China is going to make an announcement that is going to dump the market, and is like doing so in order to liquidate one particular stakeholder. So. Anyway, it's sort of an interesting tidbit that we've uncovered with our social trends is that a lot of people on social seem to be talking about this guy and waiting for the next announcement from him to see where the market might be headed next.
yeah, while you
Anyway,
were reading that post, I just brought up China's social volume overall over the last 3 months here, and clearly you can see even this much more small spike. Uh, People bring it up when the market dumps fairly often, even the really mini ones back here. But the major social volume spikes have all come on this dip with the news of China, and their ban announcements going on. It's very similar to, I remember, kind of like September, October of 2017 for those who were in it in the first bull run. That's when China basically put a ban on exchanges at the time. Um, I don't know if history is repeating itself to that extent, but very clearly, China is being attributed as one of the main causes for this dip, and the crowd seems to have a consensus on that.
for sure. We're 40 minutes in. Guys, I think Max has already mentioned in chat, we are going to look into a few assets before we go. So coins that you are interested in outside of Bitcoin. Um, are you interested in more data on Ethereum? Do you have any other bags that you would like us to maybe analyze a little bit as far as its on-chain and social metrics? Let us know in chat, and then we will select the few that get the most mentions or votes so that we can analyze them a bit more closely in the next 15 to 20 minutes. Keep in mind that it's best if you guys let us know, if you guys ask for Ethereum-based coins, just because we have the most data for Ethereum-based coins. On-chain coverage, our on-chain coverage is by far the most comprehensive as far as Ethereum-based tokens are concerned. Obviously, we also have on-chain data for other coins like Bitcoin, Litecoin, XRP, and a few other top caps. But we're still sort of not up to par with our on-chain coverage with coins like Polkadot and Cardano. But stay tuned, and some announcements might be happening. But either way, even if you don't want to look at Ethereum-based coins, we can still look at stuff like social volume and development activity. But if you want sort of a bit more granular analysis, Ethereum-based coins are the best ones to take a look into. Brian, I think you're trying to show your NVT template in the meantime.
Yeah, it should pop here in just a few seconds, but the story it's going to tell is that we're still in bearish territory. We have been getting a big increase in token circulation over the past couple days, but take that with a grain of salt because the circulation is likely coming as a result of the panic from this massive dip that occurred. So this model, of course, works best when the price is relatively flat, uh, because you can really see how circulation is fluctuating compared to a relatively stable market cap. But with the market cap moving so much, we're seeing some bullish signs. Now that it's back up, I can show it. These last 2 days here, the lower the marks, the better. These marks are basically individual days compared to the overall red bar size, which is May 2021 as a whole. So we're about like half, the ratio is about half of where it is on the monthly average over the last couple days. But overall, this is, you want to look at what color the bar is. That's how I programmed this thing, because it tells more of a macro story about the average circulation regardless of where the market cap is. And we're on our third straight month of a bearish divergence. Generally speaking, whatever color the month is will mostly correctly predict the direction of the price the following month. You see clear evidence of it over time. This big red chunk, price is moving down. This big green chunk, right when the bull run started, or at least really significantly, that's when it ran up. There's plenty of exceptions here, but overall, this is a pretty good macro gauge of how healthy the amount of circulation is going on at any given time for a given asset. So Bitcoin's looking red. Ethereum, on the other hand, still quite green. So if you're looking at just raw circulation right now, Ethereum looks like the much more healthy asset in terms of movement. But that being said, as we all know, the markets are going to ebb and flow based on the health of Bitcoin. So even though Ethereum looks green and bullish, and plenty of other coins like Link here, I think also shows bullish, we still look to Bitcoin and its health. And if it's red, it's going to take down the markets with it if this kind of trend continues. So just keep that in mind, and take it with a grain of salt the last couple of days because of the volatility that's been going on. And while we're getting a few final poll results, I'll also show what whales are doing overall in terms of the numbers that are entering the space. I made a post yesterday about the 1 day percent change in whale numbers was going significantly up. It's going to, of course, do a refresh again to ruin my point. But overall, whales are definitely popping up in a lot of altcoins right now in terms of new addresses. Many of them were actually decreasing over the last couple weeks, but the overall trend for the majority of these 40 or so coins is an increase in overall whale numbers, which we deem the exponent number between 100,000 and a million. So, for example, if a price is at $5, we're looking at $500,000 held or more in a given asset to be deemed as a whale. But I highlighted the blue here in descending order to show that the percent changes are mostly increasing. There's a few here on the decreasing end, but over the last week, most whale numbers are going up. So this is actually a good sign for altcoins. Bitcoin, on the other hand, over the last week, there's a negative 0.18% change in whales, as we showed there in that Bitcoin millionaires template, just a very mild drop off. Overall, though, in the last 90 days, negative 4.7% drop in whales, and that's pretty significant.
For sure.
So how are we looking on poll results, Max, if you're with us? I did see he wrote a message saying he'd be right back, so he may not be back yet.
I think he's back. Max, what do the people want to see? I saw a few comments on Ethereum already, so I'm assuming that Ethereum is one of the coins that people want us to take a closer look into. More than happy to. I have a few notes ready. Yeah, go ahead, Max.
Let me refresh one more time.
Okay.
So far, first place with the gap to the second is Ethereum.
Okay. Let me share my screen, Brian.
Yep.
Matt can like that for a second. Okay. Let me share my screen and let's start with Ethereum. I have a bunch of windows open. Okay, let's see. Why am I? Okay, finally. So Ethereum. We talked about exchange inflow for Ethereum, right? We talked about this massive spike, suggesting that we've had quite a big, amount of people moving Ethereum to exchanges. A few days ago, I wrote this article saying pain markers emerge on chain, good for the market, and I talked about a few markers that have just started. I think it was on like late Monday that have started to emerge on chain for Ethereum. Which suggested that the market was moving into this sort of pain zone, right? So the first one that I mentioned is the amount of wrapped ETH liquidations in MakerDAO CDPs. We had a sort of a significant spike, and I mentioned that previous times throughout the last 3 months, these types of liquidation spikes, similar, I guess, to the like a funding rate, right? They have coincided with short-term correction, short-term bottoms and interim price recoveries. That was number one. I mentioned that Ethereum's exchange inflow is starting to rise, but obviously, this is when I wrote the article, and this is where we are right now. And then I also mentioned that Ethereum's net profit loss is starting to show like slight dips. So I thought already we are sort of moving into a pain point for Ethereum. Boy, have the last 72 hours changed that picture for the worst as far as the holders of Ethereum. So number one, let's revisit all of the metrics first that I mentioned in that article. Number one, Ethereum's exchange inflow, massive spike, suggesting, I wrote about it here. I thought, okay, it's starting to grow. The biggest spike in the amount of Ethereum moving to exchanges since late February. And I think if we take the last, an 8-hour interval, it's probably the biggest. Yes, it is. So we were looking at the 4-hour interval. If you look at the amount of Ethereum moving in the 8 hours, it's the biggest since the start of the rally. So that's number one. Number two is net profit loss. So I already mentioned it. It shows the average or the total ROI of all transactions on the Ethereum network on a daily basis. So what we're seeing here is that there's a big dip in net profit loss. So this is where I wrote the article, by the way, suggesting that at this point in time, all of the Ethereum that were moving on the blockchain on average are moving at a relative loss compared to where they were last moved on the blockchain. So massive sort of another sort of signal that we are in high pains for Ethereum holders. And then if we look at wrapped Ethereum, and if you look at liquidation amounts, and the way that you can do that is you go here to MakerDAO stats, and you look at the amount of liquidations for wrapped Ethereum on CDPs. So this is where I wrote the article, and this is what happened in the meantime. So if you thought that we were starting to see pain markers on Monday, boy oh boy, then we see pain markers over the last 24 to 48 hours. So liquidations for wrapped Ethereum in MakerDAO CDPs have skyrocketed. Like I said, and I wrote in the article, there have been similar spikes in the past around local bottoms. But I mean, if China continues to dump the market, the fundamentals are just going to have to wait until it stops giving us bearish news. But overall, I think we have seen sort of massive amount of pain and FUD markers on Ethereum, and sometimes this can point to short-term directional changes as the market capitulates, and if there's enough buy the dip pressure, it can point to a recovery. Now, one other thing that I want to look into is what is currently happening with Ethereum's MVRV. So MVRV is a metric that we look at on each of these streams. It's one of our this is wrapped ETH, sorry. One of our favorite metrics to sort of gauge the general trends of the market and it's the coin's holders. So first of all, short introduction for people that are unaware. What is MVRV? MVRV ratio is an on-chain metric that tries to calculate the average profit or the average loss of a certain group of holders. So currently we're looking at the 30-day MVRV ratio for Ethereum. The 30-day MVRV ratio essentially means we're looking at the average profit or loss of all addresses that have acquired Ethereum in the previous 30 days. This is based on on-chain data. By acquired, we mean we look at the last time that the coin was moved on the blockchain. So currently, the 30-day MVRV ratio for Ethereum is minus 15%, which means that on average, all of the addresses that have acquired Ethereum in the previous 30 days, based on this metric, obviously it's not a perfect measure, are minus 15% of their initial investment. So the way that people use this metric is that the higher the MVRV is, the more unclaimed profits there are, unrealized profits, and therefore the more likelihood that holders will begin to claim their profits, sell their bags, reduce their exposure, and as a result apply negative sell side or negative price pressure and apply more sell side pressure to that coin. So the higher the MVRV gets, the more overvalued the coin would be according to the way that people analyze this metric. And then the lower the MVRV is, the more undervalued the coin is at any given point in time. So if we look at the last 3 years of Ethereum's, let's first start with the 30-day MVRV, right? This is where we are. Ethereum's MVRV has sort of bottomed out at minus 24%, which is damn close to sort of established bottoms. Obviously, this is a coronavirus dump, so coronavirus crash, so it's quite a massive outlier, so I usually kind of just exclude it. But even then, like, it didn't really last that long. It was maybe 3 days of this massive drop in Ethereum's MVRV, and immediately we started to recover. So Ethereum's 30-day MVRV has had one sort of support level around this minus 15%, similar to Bitcoin. I will show it in a moment. And then the second one was around like between minus 25 and minus 30%. So currently it's bounced back to minus 11%, but it definitely showed that according to this metric, at least, we were quite undervalued. We continue to be undervalued according to Ethereum's MVRV in the short term. Its holders are in quite a bit of pain. And in general, there have been sort of these levels historically where the price starts to recover once we approach the opportunity zones. And then if you look at the long-term Ethereum holders, which is the 365-day MVRV ratio, so basically we're looking at all of the addresses or the average profit of all of the addresses that have acquired Ethereum in the previous 365 days. So they're still in profit on average. The longer-term Ethereum holders are at about plus 65%. Now, that is quite low if we look at like the general state of the last 6 months. Basically, since the start of the rally, we're quite low. We're actually at sort of this point right before we started to explode as far as Ethereum's price action is concerned. But it is relatively high still. I think it's still sort of almost at where we were at the high point of Ethereum's 2020 price action. So the long-term MVRV ratio is still in the positive, which suggests that there might be further pain to be experienced by long-term holders. But the 30-day MVRV ratio has sort of successfully bounced back off that support level, which I think is good. We can also look at Bitcoin. It paints a very similar picture, except Bitcoin's 365-day MVRV is finally in the negative after peaking at like 120%, plus 120%. It's finally sort of dipped into the negative zone. And then if you look at its 30-day MVRV ratio, it was very low. So one of the lowest, basically pretty much the exact point that we saw here, right? Minus 25%. Yeah. So Bitcoin's 30-day MVRV is very low, suggesting undervalued conditions, obviously. And then its 365-day MVRV is also, currently it's slightly positive since it's bounced back, but overall it has sort of normalized quite a bit. So as a rule of thumb, the lower these metrics are, some on-chain analysts believe the higher propensity or likelihood it is that we will see short-term recovery, because a lot of holders are in pain. Pretty much everybody that has wanted to sell has already sold, and there's going to be a reduction in sell-side pressure moving forward. So keep that, take that for what you want. Now, looking at a few other Ethereum metrics. Actually, it's already 5. Maybe let's look at one more and then we can move on. So we looked at exchange inflow, obviously, looked at MVRV, looked at the network profit loss. We can just look at Ethereum's general on-chain activity to see where we are right now. So first of all, quite an interesting picture that we're going to see. If we zoom out, Ethereum's active addresses peaked at pretty much the same level as they did in 2018. Obviously, this was helped by Elon and China news, but it's quite interesting to see that this has sort of been the peak hype moment in 2017 where the sort of total demand for Ethereum and general interaction with Ethereum was unsustainably high. I think these levels have also proved to be a bit unsustainably high. You can see kind of that we had a healthy growth in the amount of addresses interacting with ETH, and then we just jumped by 200,000 additional addresses. I think this was just a short-term hype that was definitely not sustainable in the long term. Now, if we zoom in, let's see what Ethereum's on-chain activity is looking like right now. So we have dipped quite significantly from like a peak of 800,000 addresses interacting with ETH. What I mean by that is sending or receiving Ethereum, suggesting quite a bit of demand, to 600,000, which I think is a more sustainable level, honestly. I think this is where probably Ethereum's current demand probably fits when we discount sort of these spikes that come along with the territory of price discovery. Currently, or in the last 24 hours, we have seen another sort of uptick in Ethereum's active addresses. In general, I think the trend or the what you want to see is that the higher the on-chain activity gets and the higher the demand for Ethereum, according to active addresses, the better for the coin, because it suggests sort of sustained network effect and sustained rise in the popularity and the demand for a coin from a fundamental standpoint. So I would hope to see this sort of uptick in Ethereum's network activity continue to rise. I mean, if it wasn't for China news, honestly, I thought it was quite a few indicators that were suggesting that we are prone to a potential bounce back. We'll see how Ethereum reacts and how its holders react to this latest dump and this latest news. Even though it's not directly connected to Ethereum, it's obviously impacting the entire market. But yeah, a lot of pin markers in the Ethereum ecosystem, and as a result, we are seeing some undervalued conditions like MVRV. So take that for what you want. I would still be a bit cautious moving forward, but it's definitely some of its metrics are looking a bit healthier than they have in days past. So is linked the second one, Max? I think Max said link, right?
Yeah, there's actually 4 that have 1 vote now. It's Link, Matic, Energy Web Token, and Burst.
I think let's check out Link. Matic has been on a massive rise, and if people want to check out Matic, we wrote a very in-depth article on it a few days ago. Max, if you go to our insights and you find the Matic article, you can share it in the chat so that people can take a look. And since we haven't really written anything about Chainlink recently, let's check out Chainlink. So let's start with the on-chain activity for Chainlink. Exchange inflow, we are seeing a relatively big spike at the bottom, suggesting more people are moving Chainlink to sell to known exchange wallets. Here, if we zoom out, it kind of gets lost because of these massive outliers. But if you zoom in, you're going to see just how big it really is. So quite an impressive spike in the amount of Chainlink moving to exchanges. It is a very similar picture to what we're seeing on Bitcoin and Ethereum as well. Network-wide, there's been quite a bit of panic, quite a bit of people capitulating away from the coins, or capitulating in general. Let's see Chainlink's network profit loss. Like I said, you take any coin and you type in a few metrics and you're going to see massive outliers in the last 48 hours. So network profit loss for Chainlink, let's see how low it is. Is it an all-time low? It's an all-time low, guys. So what this means, assuming the data is correct, which I have no reason to believe it's not at the moment, what this means is that on average, all of the Chainlink coins that are moving at this point in time are moving at a significant loss on average. So, this is probably, given the fact that Chainlink's price action has just been going crazy, it's been rising and rising. The fact that we're seeing massive losses, what that tells us probably is that people that have acquired here and then here in particular are now selling their bags at a massive loss. for some of them. So another sort of major pain indicator for Chainlink, we have seen similar drop-offs now paling in comparison, but let's zoom out of them so I can show you what they looked like previously. We have seen them around local bottoms here, here, here. Even here, we have seen a sort of a dip into negative territory. But I mean, this is just uncharted territory right now when you see these massive dips in general sort of on-chain activity, right? We can also look at MVRV for Chainlink. Let's see where we are. We're quite low, minus 28% as far as its short-term holders are concerned. If we zoom out, we are fairly close to sort of these bounce back levels. And then you take Chainlink's 365-day MVRV, and we're about plus 26%. We seem to have dropped to as low as like plus 5%. So, I mean, it's looking healthier than it did like at the start of the week, right? Plus 26% is still relatively high, but I think it leaves more room for price appreciation and price bounce back. So another sort of signal that we are indeed seeing massive amounts of pain by Chainlink's holders, both long-term and short-term holders. One other thing that we can take a look into, I mean, there's quite a bit of metrics, obviously, that I'm not getting into at the moment. I just wanted to check out a few of them because we're already running overtime. I wanted to look into Chainlink's active addresses as well as its dormant circulation. So let's look at last 6 months. Yeah, Chainlink's active addresses are about 10,000. Even with these drop-offs, we're not really seeing a massive sort of we've seen it here, right? This sort of massive decline in the amount of addresses interacting with Link. But this was also the weekend, so this is usually where you do see a lower activity with particular coins, any coins really, compared to the rest of the work week. 10,000 or 9,000 addresses interacting with Chainlink puts it still in one of the biggest assets on Ethereum. So, I mean, yeah, another sort of decent, from a fundamental perspective, I think Chainlink continues to be fairly decent. One thing that I wanted to check out was its dormant circulation, just to see kind of what its long-term holders are doing. So it's a metric that we don't really pay too much attention to it on these calls, but here, under long-term holders, you can click on dormant circulation, and let's start with 365 days to see the amount of Chainlink that are moving on the blockchain that haven't moved in a particular amount of time. So currently, we're looking at the amount of Chainlink that have moved on the blockchain that have not moved in the previous year, at least, right? So we see, spikes every now and again, but currently we haven't really, and let's zoom out of this massive spike to see it a bit more closely. Yeah, I mean, there hasn't really been any sort of major uptick in the amount of long-term Chainlink moving on the blockchain. What that suggests to me is that, veteran Link holders, the Link army, continues to hodl. They seem to be, let's look at the last 2 years also, just so that I don't eat my words. These spikes every now and again, I believe, are connected to the just general smart contract because they're very cyclical. So it's not connected to a price action. But even with this drop off, we're not seeing any sort of major uptick in the amount of out of the ordinary in the amount of dormant circulation. And then if you look at the 180 days, yeah, nothing significant whatsoever. So I think long-term holders for Chainlink continue to hodl. On-chain activity looks fine. A lot of pain, obviously, exchange inflow spiking, net for profit loss very low. MVRV shows that a lot of people are underwater at the moment. Sometimes we see these indicators suggest a propensity or an increased likelihood for short-term recovery. If China keeps dumping us with these news, I mean, I don't think anything's really going to any fundamental is going to be stronger than China's bearish outlook. But there does seem to be quite a bit of pain along the board, across the board, Bitcoin, Ethereum, Chainlink, any asset that you look into. I think we're getting close to maximum pain. Obviously, really, we're kind of in uncharted territory. There seems to be quite a bit of stablecoins moving to exchanges. So there are some optimistic signs Obviously, there are other signs to be concerned with, like, for example, the inertia seen by Bitcoin whales. We're not seeing them really start to accumulate into this dip just yet. We're not seeing the amount of whale addresses increasing. We're not seeing the balance of whale addresses increasing for Bitcoin. Overall, they seem to be sitting on the sidelines for the time being. So that's gonna, I think, it's very difficult to make sort of outright predictions at these types of junctions, especially when we continue seeing very sort of concerning or bearish news every 2 days or so. But what I would suggest is just keeping an eye on these metrics and looking for previous historical trends and how previous spikes in exchange inflow, MVRV, net profit loss, a bunch of these other metrics that we have, social volume, social sentiment. Just get familiar with the platform so that you can sort of monitor it on a daily basis. I think the next 24 to 72 hours are going to be very interesting from a on-chain and social data standpoint. So if you don't already have an account, just make one. There's a 2-week trial for people that are not already subscribed, and after that, it's just $49 a month if you're on a monthly plan. Everything that we've discussed today, plus another 100 indicators or so, are available on the platform. So strongly urge you, if you like this type of data, if you find it useful, check out app.santiment.net. And yeah, I think that's going to do it for today. Brian, anything to add before we end it? We're already like 10 minutes over time.
Yeah, we've got a big event coming up on Thursday next week, May 27th at 4 to 5 p.m. GMT +2. It's all about the future of DeFi, and we'll be talking all about our world-leading on-chain and social metrics research. You'll also get to have a nice look at our brand new crypto marketplace prediction platform, SanR, which is a great place to put these metrics to the test that we just showed you today and give an accurate assessment from your perspective as to where markets will be heading for Bitcoin, Ethereum, and several other assets. So definitely check that out, and remember that you can win free crypto there with really no charge except for the gas fees of making closes. So definitely check out the webinar where myself, Dino, and our founder Maxim will all be there to talk a little bit about the future of DeFi and SanR. So you'll see the invite on the top of our Twitter pinned, and you can click on the link. You'll see a sign up button at the bottom right.
Can you, Brian, add a link to it in the chat for people that want to? Yeah. I'm just, while you're looking at it, I'm just checking out dormant circulation for Bitcoin and Ethereum. There has been a spike in dormant circulation, slight spike, like I would consider it definitely an outlier in the amount of Bitcoin that have not moved in the previous 365 days. Slight spike, let's see, 2 years. Yeah, a spike, but I mean, we've seen higher. It seems like a par for the course. 3 years, a significant spike. So some dormant circulation. Oh, look at the 5 years. Yeah. So across the board for Bitcoin, it seems like we are seeing long-term holders also kind of look to exit the market a little bit. There have been like if you take spikes in dormant circulation plus the amount of exchange inflow, it's probably going to correlate to a certain degree. Obviously, not all of these spikes are going to be long-term holders moving to exchanges, moving to sell, but a move is a move, and especially when it happens during this type of a correction. Sometimes you just need to read between the lines and assume what's the most likely scenario for these coins to be moving now after 5 years, right? So yeah, make your own decisions in that regards. That's gonna do it for this call, guys. Hope you found it useful. Let us know what you would like us to do different or better in the comments below. Also, check out our Discord. The link is in the description of this video. Ping either me or Brian on Discord and let us know if you have new ideas for this show, how you would like us to change it, improve it, if you would like us to talk more about specific types of metrics, like you're more interested in social data, you're more interested in whales, you're not very interested in, I don't know, MVRV. If you would like us to cover more coins on during the stream, that's gonna always be a little bit difficult because an hour is really not that long to look into. We can maybe look into 4 or 5 coins, but that's about it. But if you have other ideas of how we can improve the stream, please let us know in chat. We're always looking for new ideas and interesting ways to to elevate the production. Okay, thank you, Brian, very much for everything that you showed us today. Thank you, Max, for handling the stream like a pro, as always. Thank you, everyone, for joining. We're going to be back in 7 days to hopefully a better market, a more sort of a stronger bounce back. But either way, check out our Discord and let's continue talking there. Thank you, guys.
Great stuff.
Talk to you soon.
Thanks, Dino.
Bye-bye.